Okay, I think we're going to get started, everyone. I'd like to welcome you and thank you for being a part of it here today, being part of our discussion. My name is Brad Forney. I'm the president of BCF Group. And for those of you that aren't familiar with us, we're an insurance and risk consulting firm here in Lancaster. And we work with businesses, nonprofits, and individuals and help them solve their insurance and risk-related issues in their businesses and organizations and in their families. So oftentimes our relationships go beyond insurance really with our clients, where we serve as a trusted advisor and a trusted partner to our clients and our friends. And that's a little bit about what today's discussion is about, is how do we deal with some of the things that even are beyond insurance here that we're dealing with in the world we're in right now. We have about 80 people joining us today on the conversation. So again, thanks for being here. We've been getting a lot of questions initially about COVID-19 and how it relates to your various insurance policies. And then more recently, over the past week or 10 days, a lot of our clients' questions have turned to more of questions about the Families First Act and the CARES Act that just came out. And if you're like us, you kind of got bombarded with a lot of information and you took that in, and now we have a number of questions that were being asked. And so today, while it's not an insurance issue, these are more legislative acts, we wanted to try to facilitate a conversation to just help each other wade through some of these legislative acts and some of the questions that we all have. So hopefully we can do that today. That's the idea. The purpose is to really have a Q&A. We've invited two guests to join us today. Two attorneys from the law firm Gibble, Crable & Hess, which is a law firm in Lancaster here. Gibble, Crable & Hess has been a well-known firm in our area and trusted advisors to us and partners of ours for many years. So we're really grateful to have Jeff Worley and Jason Asbell with us today from Gibble, Crable & Hess. And Jeff is the designated specialist in their firm for the Families First Act. And Jeff got his bachelor's degree from Millersville University and his law degree from the University of Arizona. And his practice areas are employment law, corporate and intellectual property, civil rights and administrative law, and litigation. And so thanks for being with us today, Jeff. We appreciate you participating. Jason Asbell is the designated specialist at Gibble, Crable & Hess for the CARES Act. And Jason got his bachelor's degree from Wake Forest University and his law degree from Emory University. And prior to joining Gibble, Crable & Hess, was an assistant district attorney. So his practice areas are employment law as well, litigation, and civil rights and administrative law. So thank you, Jason, for being here and taking part today. Couple things, just if you toggle over the bottom of your screen, you're going to be able to, you should see a Q&A button. We're going to use that to field your questions. If you have a question, use the Q&A button at the bottom of your screen and go ahead and send it in. We'll field those and have Jeff and Jason answer them as best we can. And our plan is to try to answer all your questions or quit at 1 hour, whichever comes first here. So we have a few questions that came in ahead of time that we're going to start with, and I'm just going to go ahead and put those out there, and we'll let Jason and Jeff respond as you guys see fit. So first of all, for the Families First Act, has procedures or forms for reimbursement through payroll taxes been established for the emergency sick pay and family leave? And how do employees provide proof of eligibility and apply for that reimbursement?
Well, I'll get to that. That's a good question, and I think that's something that's on a lot of people's radar here. Just, I guess, one quick, we're providing general answers to questions. You got specific issues, you need to be talking to your counsel, give us a call. But, what we're saying here today doesn't constitute legal advice. The following was brought to you by our malpractice carrier. With that, a happy sweatpant wearing day to everybody today. Jason, I see you put on a tie. I bet you're wearing some gym shorts under there.
Yep.
There's a couple issues with the Family First that I think you need to be aware of, and some of this is going to go in line with your accountant as well. As far as the reimbursement procedure goes, that's really going to be an accounting issue because it's withholding of your FICA portions to your employees, and so that is one of the considerations there is you're getting the reimbursement. As far as the proof of eligibility and then applying for the reimbursement, what the DOL is suggesting for proof is if it's an employee who is taking off because of the need to self-quarantine, or issues related to care for themselves or somebody who has COVID, you just want to get a note from the doctor saying that is in fact the case. Obviously, at this point, it's a little bit difficult for people to go to their doctor and get, what generally we would want a full-blown doctor's note with, and in this case, it's, those are difficult to come by. Testing is still difficult to come by. I am not aware of any requirement that an employee would have to show positive test results in order to be eligible for this program. So, work with the employee to get some kind of notice from their doctor. That can be email, some representation by the employee as well. With the school closings, what the DOL is looking for is really a notice from the district, and that could be from the website. That can be an email that the parent received. That can be from the daycare as well, saying that the school is closed. And then again, you'll want some representation by that employee to say, hey, I need to be off to do the childcare. And so that's basically what we're looking at as far as the notices go, as far as for reimbursement. And then again, working with your accountant, I think the IRS is developing some notices, although I have not seen those yet, as far as what that's going to look like in terms of submitting for the reimbursement.
Okay. For the payroll protection program, must all employees be off unemployment and paid by the employer during the 8 weeks from the loan origination date in order to get some of that loan forgiven, all or part of it? And will a portion still be forgivable if only half the employees are collecting unemployment during those 8 weeks?
I can take that one, and thanks, Brad and BCF for having us on to answer these questions, and thank you all for participating in the discussion. Let me back up and talk a little bit about forgiveness and put the question in context. So what the Act provides is that in the future, loans will be able to apply for forgiveness from the loan, and it will essentially convert the loan into a grant. And there are a few qualifications for that. That's what the question is getting to. The first is that the funds have to be used for certain categories of expenses. They can be payroll costs, interest on mortgages, rent, and utilities. And the point of the program is to keep as many folks employed as possible. So even though there are those lists of costs that can be reimbursed, 75% of those costs have to be for the payroll expenses. In addition, the employer has to maintain its employment and maintain the salary of the salary levels of the individuals that are employed. And when you're submitting this application later on to have your loan converted to a grant, the calculation that's going to be done is the full-time equivalent employees during the covered period, and the covered period is this time between February 15th, 2020 and June 30th, 2020. That is going to be divided by the full-time equivalent employees that I would call your pre-COVID times. There are two different time periods that you could use to calculate that part, and that's something where when you get to that part, you're going to want to speak either with your counsel or with your financial advisor about how that will be calculated. But in any event, the quotient from those two from that calculation is going to be multiplied against the amount that you take out, and your the amount that's forgiven can be decreased by the difference, if that makes sense. In other words, the point is, if you reduce employees, they're trying to account for that, and the amount that you're going to be forgiven later on is going to be less. And there's also a requirement that you cannot decrease the salary of an employee by more than 25%. And if you do, that amount is also going to be subtracted from whatever amount would be forgiven at some point in the future. So that gets me to the first part of the question. If all employees need to be off unemployment and paid by the employer during the 8 weeks from the origination date to be forgiven, and the answer to that question is not all of them do. There's a grace period where you're able to bring folks back by June 30th, and they'll still get that equation. But an important qualifier is that you'll need to use these funds to cover the payroll costs, and it's the payroll costs during that particular covered period. And remember that 75% of the funds that you receive need to be applied towards payroll costs. And as to the second part of the question, if a portion is still going to be forgivable if half the employees are collecting unemployment after the origination date, then yes, I mean, it would still be forgiven, but it's really important to keep those other qualifiers in mind. In other words, what I'm getting at is your amounts could still be forgiven, but it might affect the amount that you still might have part of your loan transferred from this loan to a grant, but having using less than 75% of that money towards your payroll costs, or not bringing folks back, that could affect the amount of it that is forgiven.
Jason, so when you're talking about the full amount of a loan, if somebody, let's just say, for ease of discussion, they get $100,000 in a loan, 75,000 of that needs to go to payroll costs. The other 25,000 can be used to pay utilities, pay rent, things of that nature. Is that right?
Yeah, that's exactly right. And I think that the authors of the legislation realize that there are a lot of other expenses that businesses take on during this period besides just payroll costs. And the point of the legislation is to provide for payment for some of those expenses, while keeping in mind that the real intent of the legislation is to try to keep as many people employed as possible.
So I'm not hearing Brad here. He looks like he's talking.
Sorry, guys. Can you hear me now?
Yep.
With the Pennsylvania governor's stay-at-home order, does that meet the qualification under number 1 of the EPSL provision for Families First Act for a business that is essential or life-sustaining?
No. As you are all hopefully aware at this point, the Families First has 6 qualifying reasons for leave. And the first one is that the employee is under a self-quarantine or isolation order. And there's a difference between a stay-at-home order versus a quarantine isolation order. And so that's not going to meet the requirement of number 1 under the Families First Act.
Okay. Can you confirm that there is no requirement to opt in to the less than 50 small business exemption, only that if a business feels they qualify for the exemption and that they must document why they feel they're exempt?
That is a good question that we're looking for a little bit of additional guidance on, and I think that that's going to get into the specifics of why you're seeking that exemption. And it's a little bit difficult to answer that sort of in a general way. What I'm understanding is the employer who's less than 50 would need to document that we were unable to participate because of the following reasons. That also needs to consider, whether or not the employer is opting into one or opting out of one or both of the provisions, because as I understand it, there's the Family Act brought a number of provisions with it. The 2-week paid leave is one, and then the extension of FMLA is another separate one. So they need to consider both of those and then provide a reasoning why they are opting out of it, because they can. The DOL has also said that they are going to have limited enforcement for the first 30 days of the Family First Act, keeping in mind the Families First Act is going out through December 31st of this year. So the DOL's kind of said, look, we're going to give you 30 days to kind of figure this out a little bit. Good faith efforts by employees is going to be good enough. If you as a business are looking at saying, I don't think we can comply with this, then I think you need to talk to your counsel about, what's the basis for why you can't comply with it, and then articulating a reason as to your inability to do so.
Okay. Can you confirm for businesses that have been ordered to close, is there no wage replacement program for their workers other than unemployment compensation?
If we're looking at the Families First Act again, the governor's order to close businesses does not qualify under the Families First Act. And the option for those employees, if they're currently out of work because the business is shut down, would be to either go on unemployment compensation, to telework, what other available options there are for an employee to work. That's not considering the payroll protection program, because that is also eligible. Those businesses would be eligible for the PPP as well. But as far as it goes for the wage payment, the replacement program, they should be looking to unemployment compensation. And unemployment compensation with the additional stimulus money is hopefully bring most of your employees back to where what they had been making when they were employed. And so, I think that a lot of people are struggling with this idea of furloughing employees, and they're trying to do their best to keep employees on payroll. Again, if you're getting on the PPP the payroll protection plan, that's a whole different thing, and we need to be cognizant of your the requirements under that. But as far as placing employees on unemployment comp, that's a beefed up unemployment comp now, and that's really going to benefit your employees. And my suggestion for a lot of my clients has been, look, instead of, don't look at this unemployment comp as a bad thing. It's it's a good thing for your employees. It's a good thing for your business at the moment. It gets people off payroll. You've been paying into the system. Allow the state to carry these folks while you're getting things in order, so that when the stay-at-home order is lifted, you're bringing people back, and you have the resources to start paying them again. Brad, we can't hear you.
Yeah, sorry, gang. I think I'm back. When an employer applies under the PPP provision or has applied, when are they required to rehire their laid off employees?
I can handle this one. So to obtain forgiveness of your PPP loan, recall there is a calculation that is going to that the SBA is going to do when you seek forgiveness of that SBA of that PPP loan, and they're going to compare the full-time equivalent employees that you had, pre-COVID or pre-February 15th with the employees that you have, full-time equivalent employees that you have during this covered period. And the covered period is February 15th through 2020 through June 30th, 2020. And the deadline to bring folks back in, employees that you have laid off, to bring them back in so that they don't count against you for that analysis, is June 30th, 2020. But again, you need to use 75% of the funds that you receive for payroll costs. So it is not as if you could just bring them back on June 30th and then somehow it's automatically going to go back and count for these employees that you've brought in if you're not using 75% of your funds to cover payroll costs.
Now that people have applied for the PPP loans, they're just waiting now for financial institutions, the government, to process those? What happens now?
Sure. So, and lenders are approaching this somewhat differently. And right now, this is probably the area where there is the most confusion with what's going on, and it changes almost daily and almost by the hour, right? But what banks are doing is they are receiving these applications and they are conducting a review of those applications in-house. And every different banks have assigned different numbers of folks to review these applications. After they review the application and submit it on to the SBA for ultimate approval, there is a number that the SBA is assigning to those different applications. And the SBA is then indicating whether they are going to grant that loan request or not. And the banks are then communicating with their customers about whether those folks are getting approved for the loan or not. And again, every bank seems to be operating a little bit differently with how it is that they're processing the loans and how they're going about those steps, but that is the general overview of what they are doing.
For churches, can you, this individual's understanding is that the PPP provision may not have been available for churches. Can you discuss if that's accurate or not? And also some $10,000 credit of some type that they'd like to hear more about, or have that explained, maybe that it's tied to 50% drop in receipts. Can you just talk a little bit about how these things might apply to churches?
Sure. And the how this applies to religious institutions is one of those areas that has kind of been up in the air, that is being sorted out now. So I don't want to speak with a lot of specificity about churches, because that's one that is still up in the air, and I would encourage whoever submitted that question, if you are considering applying for a PPP loan, to contact your lender, and to back up. As most folks are probably aware, the PPP loans, you can't go online and apply for them directly with the SBA. Those are being distributed through SBA approved lenders. Most banks appear to now be on the SBA approved list. So I would encourage that religious institution to contact its lender and to express interest in proceeding with a PPP loan, and whether they qualify. There was a mention in there about a $10,000 grant. There are other emergency aid programs that were enacted in that same CARES Act legislation, along with the Payroll Protection Program, which is the one that we are all the most familiar with. And those, and there are also some state programs as well. So anyway, there's a number of different sources of potential funds that are out there. The Payroll Protection Program is the one that is getting the most interest right now and has the most amount of money attributed to it, other than there's a separate fund for larger businesses that has some more. So anyway, there are different programs out there, and I would encourage that person to speak with their lender about what types of programs might be available to them.
As a follow-up to that too, there's under the CARES Act, generally most churches and religiously based nonprofits who were affiliated with the church did not participate in unemployment compensation. The CARES Act opens that up for those employees to now participate in unemployment compensation. If you, as a church or a religious nonprofit, previously did not participate in unemployment compensation, your employees are now able to do so, and they should be submitting applications for unemployment compensation if they are furloughed. And additionally, just while we're on the topic of that, there are some nonprofits who have opted to pay unemployment compensation claims on a dollar-for-dollar reimbursement. And so while all for-profit organizations, sort of have an account set up, they pay into that account every pay period. It sort of acts as insurance. Nonprofits have an option to pay claims on a dollar-for-dollar basis on a reimbursement sort of model. The CARES Act does provide that those nonprofits will only need to reimburse at 50% of what they would have previously reimbursed. And so that's opening up a little bit of aid for nonprofits in the unemployment comp realm as well. So for those nonprofits who are participating in unemployment compensation, but are participating in a reimbursement model, they will only need to reimburse at 50%.
Okay, for the PPP loan, if you get your funds, let's say April 15th, a week from now, when must they be used by, and when do you have to give accountability for the forgiveness?
So really good question. And this is an area where I hope that we will obtain additional guidance from the SBA and the Treasury Department in the near future. As some folks might know, they released answers to some frequently asked questions as recently as yesterday. So this stuff continues to be rolling out. What I can say is that the covered period for the payroll protection program is February 15th, 2020 through June 30th, 2020. So as I read it, it appears that an entity is required to use those funds for the stated expenses that are permissible in the payroll protection program by June 30th, 2020, and that would be the smart move to proceed in that way. Is it possible that in the future we're going to get some other guidance that might expand on that a bit? I think it is, and I hope that we do. But right now, that is the way that the statute reads, so that's the way that I would encourage to utilize their funding. As far as the seeking forgiveness in the future, that is also an area where we know generally what the SBA is going to require from folks to obtain forgiveness in the future. There is not a lot of guidance right now about how it is that one actually obtains that forgiveness, other than saying at the conclusion of the program, entities are going to be able to apply for forgiveness, and they're going to have to submit the various items that I mentioned before. There are some certifications that they have to submit explaining what it is that they've done with the funds, and they're going to have to attach that essentially proves that they were using these funds for covered expenses. So to answer the question, June 30th, 2020 would be the smart date to stick with as far as using the funds for the covered expenses, and the application date has not been made certain in any of the guidance that I have seen. But as I read it, it appears that that is something that would occur after June 30th is when I would anticipate that the application process for forgiveness would begin. And to put that in perspective, the loan repayment is the repayment is deferred for 6 months after receipt of the loan. So it's not repayment doesn't start 30 days after you receive the loan or something like that.
And Jason, that repayment is just you start payments on it. It's not the full amount's not due in 6 months.
That's correct. That's right.
And then those PPP loans are at 1% interest rate?
Yes, that's right.
So it's not a bad deal. I mean, if for whatever reason you're using it for another expense that's allowable under the PPP, and you're not getting reimbursed for the full amount, it's still not a bad deal for an employer to take those funds. You're getting a line of credit basically for as I understand it, 2 years at 1%.
Yeah, important points there, and also that there is no prepayment penalty. So right now, and I think that the legislation and guidance accounts for this. Right now, there's a lot of confusion. It's sort of mass chaos, both certainly at the regulatory level and trying to figure out how these things are going to work. We talked about the confusion with the banks, how they're going to roll out this program and get folks their money. But there's probably the most confusion among the business community, right? And what is going to happen to those entities over the next few weeks? What their revenues are going to be like, how it is that they're going to meet expenses. And I think that there is, even though the amount of the loan is really set, right? It's 2.5% of your average monthly, or 250% of your average monthly payroll costs. There's a lot of confusion about how that is actually going to shake out, and it certainly could result in folks seeking more money than what it is that they actually end up needing to use under the program. And they can, important to keep in mind, no prepayment penalty. So you can, if you find at the end of your loan or at the end of your loan period that you've requested more than what you need, you can repay that upfront without a penalty.
Okay. Can employees use normal FMLA time after the Family First Act runs out?
So there's with the Families First, what we saw was there's an expansion of FMLA as to childcare only. And so that FMLA expansion provided, one, it now applies to employers with less than 50 employees. Again, understanding that there may be exceptions to that if hardship on the business. But as in pre-COVID days, FMLA was only available to employees of an employer who employed more than 50 employees. Now it's available to any number of employees, but that is only as to childcare. So if we're talking about an employer who is over 50 employees, the 12 weeks provided under the FMLA expansion is not an additional 12 weeks of FMLA entitlement. And so a couple things to keep in mind. If an employee had utilized 6 weeks of FMLA, let's say in January, because they went out for surgery, they are only entitled to 6 additional weeks of FMLA, and that would be to use for the child care under the Families First, or it could be for their own, health, qualifying health conditions. And if an employee, again, for an employer over 50, that employee uses 12 weeks under the Families First for childcare, and then let's say come November this year, they need for surgery, they may not have FMLA entitlement at that point. And so it is really, there's 12 weeks available, but that 12 weeks is acting in concert with any previous FMLA or any future FMLA as well.
Okay, if employees are part-time and they elect to stay home, even when work is available, how's that handled as far as maintaining the payroll levels?
I can answer that. And they still count, right? If there are employees that are working for you, and you're applying to and you're it's you still I guess you still they still count. I mean, it's run into a tricky situation though. There are some folks that are able to work from home, and I think that is primarily the what you're going to need to be able to explain later on. In other words, they might not be coming in, but there's work that they are able to do from home. If they're just not working at all, then I would really you to speak with your legal or accountable about how to proceed with that, because the guidance is not really clear on what it is that you're supposed to do with an employee that is just just not working.
Well, and as to that, following up on that, I've gotten a lot of questions from clients of mine who are asking me, look, I got a 60-year-old employee who has COPD. They don't want to come to work. We're not shut down. Maybe this may be in the healthcare arena or in one of the essential businesses, and they're saying, look, they don't, but pretty good reasoning for not wanting to come to work because they have an underlying health condition. When we look at those folks, my guidance is really going to be, again, you're going to look at this on a case-by-case basis. You're going to have to look at this through the rubric of the Americans with Disability Act as well, and say, wait a second, this is a qualifying disability. There's a request for an accommodation now. What's the reasonable accommodation? Probably going to be time off. Is that person now eligible for unemployment comp? It's possible. My suggestion would be that they apply for that. Then on the flip side is, you have these folks who are maybe, let's just say, in their 20s, healthy, under conditions, and they say, hey, I don't want to get exposed to this either, and I'm choosing not to work. And for those folks, again, you need to look at it on a case-by-case basis. But you're looking at this, and I think my pushback to those employees is to say, look, we have the work available. We're not aware of any underlying health conditions that you might have. Our expectation is you're coming to work, and if they're not coming to work, that may be, and again, I can't stress this enough, is going to be case by case, but that may be considered a voluntary layoff at that point. That may be considered a voluntary termination. And when that employee then is going to apply for unemployment compensation, the employer's response might be, there are hours available. We are operational. We're not aware of any underlying health conditions. No doctor's note was provided to us to otherwise assert that they couldn't come to work. And as such, we see this as a voluntary termination.
Are retirement and health insurance premiums count as part of payroll cost or non-payroll costs under the PPP?
Yeah, so retirement contributions and healthcare costs are considered payroll costs under the PPP.
Okay. Can you talk about the economic injury disaster loans and the emergency economic injury grants?
Yeah, so those are some of the other programs that I had mentioned earlier where money is available. The funding amounts are different, and there are different ceilings for the amount of a loan that one can obtain. And unlike the PPP loans, they are not forgiven at the conclusion, or they don't have that possibility of forgiveness later on. So those are the main differences between the PPP loans and the EIDL loans that you referenced.
Okay, we're getting a couple questions about the extra $600 a week for 4 months. If an employee who still gets 1 or 2 days a week applies for unemployment to make up the difference, do they also get those extra?
So there's a lot of questions regarding those extra $600, and as a preliminary matter, when are they going to come? When are we going to get them? Because they were approved. My understanding is the states have not yet received those, and we're hoping to see those come through in the next week. And that's what I've been told is they should be coming through in the next week. But we're waiting on that. As far as the full $600 goes, will that employee be eligible to if that employee is working part-time? As I suspect most of you know, an employee has a reduction in hours. That employee is eligible for partial unemployment compensation. So you would have your eligibility amount, and then it's reduced by your income in that period. And so the $600 is designed to provide an additional amount to employees to sort of bring them back up to where they had been. I am not 100% sure if an employee is working, let's just say 50%, whether they're going to be receiving $300 or $600. I don't know the answer to that question off the top of my head here. But employees who are working part-time are eligible, if they had been working full-time, are now eligible for a partial unemployment compensation.
We got a couple questions kind of pertaining to that $600 extra that you're hearing a lot about. It almost seems as though some employees would be better off getting the unemployment and the extra 600 than actually getting paid under the, remaining on payroll under the PPP provision. Does that sound right to you?
I think sounds right is maybe, it doesn't sound right to me. But yeah, that's correct. It is the case. I mean, and there's a couple things I think for folks to keep in mind. And one is when we're looking at that 12 weeks of FMLA time that's available to employees through the Families First Act, that's at 2/3. So, if you have an employee who, for some other reason, can legitimately assert, I need to be out of work, or they, could be furloughed or something to that effect, that employee better position to be receiving unemployment comp than to be receiving the FMLA Families First at 2/3, because likely under unemployment comp, they're going to be receiving their full salary amount. And then, as to your point, yes, I was aware of this when the legislation was being debated, and that was one of the sticking points for some of the senators on this was when we provide that $600, some of those employees are going to actually see an income. They're not working, and it's really going to incentivize some of those people to stay on unemployment compensation as long as possible and not to return to work. The remedy to that for a lot of employers is going to be, we're calling you back. It's time to come back to work. We're back open for business. We have hours available to you. And if an employee at that point, for whatever reason, they may, I doubt you're going to have any employees going to say, well, I'm doing better off on unemployment comp. I'm not coming back to work. But that may be some of the underlying motivation. But in those cases, the unemployment comp office to let them know, we have hours available. This employee is now refusing to return to work. And my understanding is that would disqualify that employee from benefits moving forward.
If you're approved for a PPP loan, do you have the ability to delay taking the funds until your business reopens because of the mandate being shut down right now? And have you heard anything about the June 30th date being extended?
Good question. So I don't see anything in the statute or any of the guidance that has been issued subsequent to it about allowing for any type of a delay. Perhaps your lender has some sort of program where they would provide for that, but there isn't anything like that in the statute or in the guidance. As far as a potential delay goes, or extending this, past June 30th. Right now, the statute reads June 30th. I know on the news just this morning, there was talk of additional pressure on Congress to come back with an additional $250 billion to add to the program. And I would suspect that would involve some sort of increase in the or extension of the timeline, right? Because I think a lot of individuals believe that the economic downturn is likely to last well beyond June 30th. So it wouldn't surprise me if any of the subsequent legislation provided for that, more money and more time. But the way that it reads right now, it doesn't have anything like that. It's June 30th. I did want to go back for a second. By the way, you asked me earlier about faith-based institutions, and I did have a chance to double check some of the guidance that was issued recently from the SBA. And while a faith-based institution typically might not qualify for a funding program from the SBA, it does appear that the SBA is allowing faith-based institutions to proceed. So back to that earlier question, I would certainly suggest that whoever asked that question contact their lender about how they could go about submitting an application.
Okay. we've been getting some questions, and in talking to actually a number of our banking friends and contacts last week about the interest rate on these loans. I've gotten varying reports about what the banks can charge for interest. Do you know what that is?
Yes, the PPP loan rate is a 1% loan rate. The banks, the banks do get paid on the back end by the government, and there are different fees and arrangements that the two of them have. But the government and the banks are apparently working towards for those. But it is a 1% loan.
Yeah, okay.
And there are no closing costs with that, as well as I understand it. So no personal guarantees, no closing costs as well.
Yeah, that was another question is, can the bank charge fees? And, if they can only charge a very small interest rate, can't charge fees, how do they get paid? So can they charge any fees, or their compensation comes from the government?
That's right.
Yeah. Okay. For self-funded employers, is there a some kind of guidance about how to determine cost of health care because health insurance is eligible for forgiveness under the PPP loan? How does that translate to a self-funded plan, because it's difficult to put an exact dollar amount on costs for a short period of time? Guidance there.
Yeah, that makes sense. I have not seen any particular guidance, although I do know that there is a new window opening. I believe it is the 10th when additional individuals will be able to apply, and I think that some of those types of questions will fall under the applications that are being submitted for that April 10th window. I have not seen any particular guidance about how that calculation should be made.
Mm-hmm. Does COVID-19 related reasons trigger the family first paid time off? Does that also qualify somebody under the FMLA?
So if an employee again, if we're looking at an employer who has more than 50 employees, and so they are an FMLA covered entity, if an employee goes out because of health-related issues, either to care for themselves or to care for a family member, that is for leave. And so likely they're going to be entitled to the 2 weeks of paid leave for FMLA as well, just as you would, for somebody who's out for surgery, or taking care of their kid because their kid had surgery, or any number of FMLA qualifying reasons.
If an employee is on partial furlough with reduced hours, so maybe working 20 hours instead of 40 hours a week, and they become unable to work those 20 hours due to one of the qualifying reasons, eligible to receive emergency paid sick leave and expanded FMLA based on their part-time hours?
Yes, a part-time employee, you're going to be looking back a period to determine what they had been working while they were as a part-time employee. If the sort of partial furlough has now recently, my understanding is that they're still considered a full-time employee for purposes of the Families First Act, though, and that likely would be entitled to the full amount because of when we're doing the part-time consideration, there's a look back period where the employer looks and averages out. I think it's over the last preceding 6 months, if I'm correct on that. And they do an average of how many hours per week they worked, and that sort of comes up with the formula for your part-time employees as to what they'd be eligible for in terms of paid leave. But if it's somebody who was a full-time and now is working part-time and now cannot work at all due to one of the qualifying reasons, I would see them as still being an eligible full-time employee.
Okay. How does the emergency paid sick leave work for exempt employees using the benefits intermittently? If we're understanding the Families First Act, that would qualify as a bona fide sick leave policy, and that we would only pay then 2/3 or up to $200 a day if they needed to care for a child whose school is closed.
That's right. That's right.
Yeah. Okay.
Yeah. And then when you're talking about that intermittent use of the leave, that it has been an issue for a lot of my clients, because in some cases, they're an essential business. They need to find scheduling and make it work for people. And so one of the things we really try to stress is having that open communication with your employees, so that you are looking at, hey, you used to work first shift, we have third shift available, or we're going to move somebody from the third shift to the first shift, and we can slot you in on the third shift to allow you to continue to work if that's an option. And then we're also, for those folks who are teleworking, the intermittent leave is really at the discretion of the employer and the employee, and they need to come to an agreement as to whether or not they're going to allow for intermittent use of that leave. Generally speaking, under the FMLA, intermittent leave is a right, with the leave under the Families First. For the FMLA portion of that, it's not a right that the employee has, and so an employer can say, no, we're just going to simply have you take the 12 weeks straight. We're not going to do an intermittent sort of thing at this point, but that's really a discussion for to have. I think you're muted, Brad.
Yeah, sorry. Okay, well, I think we're going to wrap it up here. We've got a few other questions. We didn't quite get to all of them. We're going to follow up with an email to everybody, just giving you a link to our landing page for COVID-19. It's going to have national resources and also connects to the information from Gibble, Crable, and Hess's website, and we'll follow up with that. You can also access it directly on our website presently, and we'll try to respond to the questions we didn't get to today. There are a few other ones, but I want to thank Jeff and Jason for being here and taking these questions like this and trying to help us navigate this, and also thank everybody for participating today.
Thanks for having us, and if you need anything, you reach out to us. We're happy to assist as we can.
Great. Well, if you folks that dialed in for being here, if you have other questions, whether they're related or other issues, and even if you're a client or you're not, we're here to try to help you feel out, and we're available to you. Thanks for being here. Take care, and let's figure out how to move forward here, and together we'll make it through this thing. So
that's right.
Thanks, everybody.